Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. First, before I start the video, I just want to apologize for not posting as much as I wanted to last week, basically this week. Work is absolutely killing me right now. I don't think I've been this busy for a very long time. So apologies for not posting. I think I'm going to go back to the 2 videos a week, maybe the one weekend and one midweek or so on. But we will see. I want to post as much as I can because I've got a lot of information and things that I want to share with you guys. So inshallah, I'll continue posting anyway, but apologies. I think I haven't posted for like 6-7 days now. But yeah, so inshallah, I'll be posting more in the next few weeks. Inshallah, hopefully work will cool down from now on. But today, what I would like to do today is to share with you guys some changes that I'm going to make. So I was about to do this and I realized, you know what, why not share with the communities? Because I have sold one stock and I'm buying basically a few more shares of different companies. I've got about £1,363 to invest in. As you can see, my ISA account is about, I've got £11,275 to actually invest or to put into the account before the 6th of April 2024. So we're getting there slowly but surely, and the portfolio, as you can see, has been going up and down. Now because of the sale, is actually taken a bit of that money. Okay, the sale was about £900, so the rest of it is this week's money plus some from last week, because I actually didn't put enough money last week as well. Like I've always said to you guys, I want to be transparent. I want to tell you what I'm buying, what I'm selling. I normally add £250 a week. If I miss 1 week, I actually add it for the following week. So I'm going to talk about general markets and so on, and a bit of news as well, bit of the what's been happening in the news last couple of days. Because if you haven't seen it, the markets basically were down quite a bit just last couple of days. I think it was Wednesday, it was down quite a bit, and the reason was because the Fed said they basically declines to hike, but points to its rates staying higher for longer. So they said, of course, we're not going to hike right now, but basically the rates will be staying here basically for longer. And they also said, what if inflation doesn't come down, we will also not hesitate to hike basically again, or to put the interest rates higher. That's not in good, basically that's not good news, number one, but that's not in news, that's old news. And when something like that happens, the markets do not like, for whatever reason. But it's not like we didn't know about that. They have been doing this for now a year and so. So what they do is, if inflation is still high and basically persistent and is not coming down, they will then hike the interest rates then to kind of bring it down. So that's been happening for a while, and it will continue to happen if that continues. Basically, if the inflation keep going up. Now it has come down quite a bit. I think it's like now whatever 4%, whatever is in the US, and the UK is about 6.5%, whatever it is. So it has come down, but the rate they basically expect is about 2. Okay, so 2 basically percent of inflation. Right, we're still a long way to go. So that's not in basically news that was new to us completely. So we knew that's going to happen. We knew they're going to say that. They have said that every single time they spoke. Whoever speaks, every single time, whether it's the US or UK, they always said, you know what, if it stays the way it is, we're going to hike it. If it comes down, we might pause it and just wait for a few months. They're not going to cut anytime soon until basically it hits around 2%. So we will see anyway. We will see what happens. But yeah, that's the reason why the markets were down quite a bit on just last couple of days, about 2%. I think the S&P 500 was down about 1%, the Nasdaq about 2% or whatever it was. I think that was Wednesday, so just about a day ago. Now, when you look at let's go back here. So when you look at just for the month, okay, it's flat. Nothing has happening in this month. So we are where we started basically about a month ago, and same goes for the Dow Jones Industrials as well. Last 5 days is actually down about 1%. For the month is that basically almost a flat. The Nasdaq's actually hit harder because, of course, normally when things go down, Nasdaq is the first one to go down a lot. You could see about 2.5% just for the week, and when it comes to the month, it's almost flat. So the markets are generally flat. They haven't done anything. Okay, so for this month, and probably would continue doing that for a while until, of course, inflation comes back down, and then the interest rates start coming down again, and so on. And that could be in midway 2024 or whatever. But What do we do in these kind of situations? We take basically that opportunity and buy more great companies for discounted prices. And when I say great companies, I mean genuinely after doing your research and so on, you researched about everything, the halalness of the companies, as well as the everything else about you need to know about the company, understand their business model, the competition, basically where they're heading in terms of the company, basically revenue and so on. Once you've done all of that research, then you put some money to work and you forget about it. And I genuinely mean it, like don't even touch it, don't worry about it, leave those companies alone for a long time. If you're buying ETFs, even better. If you're not like crazy I am and buying basically all these individual stocks and you're stuck with basically this type of ETFs that's up right now 12% and so on, that's doing better than some of these companies that I've got in this portfolio, then of course do that. But for me, I'm just a little bit now taking a little bit of risk, and I'm actually buying a lot more of basically these individual stocks instead of ETF for now. But sooner or later I might switch to something else. Basically, I might start doing more ETFs and less stocks. We will see, inshallah, in the long run. Right, so let's talk about basically what I've done today. So the first thing I've done is sold out completely of Cisco. Cisco, I had about 44 shares. I've halved it about a month ago, and I sold the rest of it just today. And the reason I sold this to Cisco is not because it's a horrible company and is basically not doing well. Two things, first of all. I've got a lot of companies similar to Cisco, like basically steady Eddie kind of companies that have been in the portfolio for a long time, grow about 2%, 3% to about 7% on when they're doing really, really well. Now, I have a lot of these companies. I've got companies, for example, let me quickly show you some of those companies. I've got Cummins actually better. It's growing a lot better. I've got Home Depot. I've got J&J, Medtronics. I've got Merck is actually slightly better. What do I have? Procter & Gamble. Okay, I've got Public Storage is actually doing better now, I think. Qualcomm is another one. RB. I've got Rio Tintos. I've got Unilever. I've got the rest of them actually okay. Even Union Pacific is actually not Union Pacific. United Parcel Services is actually better than it was before, but it's now growing about 2-3%. So I have a lot of companies that are very, very slow growers, and there is a reason why I have them. I'm not just I like this company or whatever. There is a reason. Okay, I want to keep the portfolio balanced, and for that reason they're in there. But for that reason, actually have a lower beta and so on. And of course, they do pay excellent dividends, and you get your 7%, 6% over basically 5 to 10 year period. You basically will do well. And I'm going to keep those companies in there. But Cisco is a part of the technology companies. My tech companies are doing really well, and they have taken over my entire portfolio. And I'll show you in a second, because I think it's about 25% of my portfolio was technology. Now, the issue with Cisco is it's basically none of that. Okay, couple of things. I'll show you the earnings first of all, the prediction for going forward. So you're getting in terms of earnings about 4%, which is decent, right? And then you've got 1%, 2%, or let's call it even 3%, 2.3% of basically in terms of revenue, which is absolutely fine. But what they've done is yesterday, they've actually decided to buy a new company. They announced a deal, but quiet as planned. This company, $28 billion they're paying for this company, okay? And they're paying, now here it says they're paying, basically they're using cash to pay off all of that money, $28 billion, so not thousand, I wish, okay? But it says in cash. But I read somewhere else they're using cash and debt to do that. I don't like that. And the other thing I don't like about this deal is the fact that it's more expensive, roughly 32% premium to Wednesday's closing price. Why is the company so desperate to do this? It makes absolutely no sense, because there's not much of a growth in the organic growth in terms of their actual business. They're acquiring this company that deals with sort of like monitoring and analyzing data. So they basically get into the more security side of things. And this, of course, as the internet grows and AI grows and all of that stuff, they need something to protect their products and so on. But $28 billion, and a lot of it comes from cash and share. I'm sure the fact that it's almost too expensive to pay. Okay, for that reason, I already sold half of my shares anyway, and I sold the other half today. So you might be asking and saying, okay, what are you doing with that money? I'm actually putting that money to Procter & Gamble, to consumer staples. This company is very stable. It's been around for donkey years. It has excellent dividend that it pays every single year for 60 something year plus. It's very similar to Cisco in terms of growth side of it, but it has a product that they can easily increase the price when inflation happens. For example, they have a pricing power. They have a wide economic mode. They've been around, like I said, for a very long time and have a very, very easily predictable product. We go to the shop, I buy Head and Shoulders every single month without a fail. Okay. And I actually like that. Something about this company, I've always liked this company, but it's been too expensive and it's now trading about 23 PE, forward PE. So it's time for me to look at this company and maybe add a bit more shares. So the money that I've got from Cisco, I will put into this, because for first reason is because I really like the company, Procter & Gamble that is. And I also like the fact that they, in terms of valuation, is actually not as bad as I thought it would be. So when you look at, for example, the current basically PE and the 5-year average, basically the 5-year average is almost identical to, so it's almost flat right now. It's not too expensive, it's not cheap, it's just fairly valued. And if you had followed this company in the last few months, you will know they were trading a lot more higher multiples, if you like. So according to here, the rating side of things, okay, you can see here Seeking Alpha Analyst is saying it's a hold. Wall Street is actually saying a buy, and Quant, which is the basically software this company uses for Seeking Alpha to analyze basically stocks, is saying it's a hold at the moment. When we look at Wall Street and see what they think about the company, there's about 10 of them that are saying strong buy, 4 are saying basically it's a buy, and 9 holds in there and 1 sell. Now, when you look at the price, they expect it to be, this company to be, is $167 per share. That's about 10% upside from where it is. I've had this company for a long time, and for 2 years actually have not added to one single share. Now, if you look at the earnings, like I said earlier, they those are, when you look at the EPS, for example, they're growing about 8.5%, 7%. Just if you focus on the first 3 2024, 2025, and 2026, you can see 8%, 8%, and almost 9%, which is very, very good. For me, that's very high for this company. Now, when you look at the revenue side of it, this, like I said, this is a huge company. I think it's like 350 billion market cap right now, but 4.2%, and then almost to 4%, and then almost another 4% there. Growth for the next couple of years. It's not easy to grow organically, these companies, okay? But from $85 billion to $88 billion to $92 billion is absolutely solid. And if you carry on all the way down, you can see every single year they actually increasing about 3% or more. Okay, although there was only 1 or 2 analysts looking at that. Right, so that's the reason I wanted to add this company. There's another reason. I've looked at also Simply Save Dividend. And they say when you use the dividend yield, okay, when you look at the dividend yield valuation, it looks reasonably valued at the moment. And when you look at here, go away, okay, it's a moderate buy for tip rank, and basically they expect 167. It's about 11% upside from where it is. When you look at Simply Wall Street, it's about 21% undervalued at the moment, and it should be about $193 per share. Now, when you look at Morningstar, which I used for the last couple of years, it's about 12% premium right now. It has not come down from this, basically. This is the lowest it's been for a long time now. So I'm going to basically initiate a few more shares, and I would love to buy this company if it comes down again. But again, 12% premium right now. Of course, when you look at my portfolio and look at the company, I'm up, I think, there we go, I'm up about 18%. Okay, but a lot of that is the FX difference and so on. So what I would like to do today is buy maybe another 8.3 shares to round it up to about 30 shares of this company. Right, so we've got Procter & Gamble here. The current price is $152 per share. 8.7 shares is what we're buying. That's over £1,000, £1,080 right now. And the market is flat today, so it's not up or down today, but I'm gonna initiate and just send this to the market. Of course, it might just wipe out some of my 12% gains, or 400. I've had 412. So it might just wipe out a little bit and basically make this slightly higher. But to be honest with you, I don't really care. I've been waiting for this for basically for a long time. And as you can see right now, I've got 30 shares of this company, £3,721 basically of this company. So there you have it. So that's the first buy I want to make today. The other company I want to buy today is AstraZeneca. They had a bit of a very good news today. They have a breast cancer research they've been doing, or drug they've actually been doing, and now it's phase 3, and they had a bit of good news. They basically, the patients are reacting well to the medication and so on. So today is, I think it's about 2% up or 1% up or whatever it is. So I do have 22.7 shares, so I'm gonna round that up to 25 shares, so £255. Let's see, send that to the market, and hopefully that'll go through. The market is still open in the UK. Okay, so this should now change to 25 shares. There we go, 25 shares of that company. How much have I got left? £28. I'm just going to leave that in there. £28 left of the money that we wanted to invest today. In fact, I will definitely be investing because I don't like having any money in the basically in here. I've decided to add it to Rio Tinto. As you can see, it will give me about half a share, £28.09. I'm going to show you how much Rio Tinto paid me this week. I was absolutely surprised, and the reason is because I think that was the highest dividends that I've ever received. So I'll show you very quickly. And here you have it, £71 for 52 shares that I had at the time. So I still have 52.5 or whatever shares. But yeah, 52 shares, I've been paid £71.67. That was the highest I've actually ever received from any company, I think. This company has paid me a lot of dividends. This is why I've always said to you guys, this company is there for basically for that money, and it actually goes up. It's not like a flipping, whatever it's called, this thing here, 3M. It's not like 3M that's sitting there dead. Of course they pay a really nice dividend, but Rio Tinto actually is a very, very cyclical business. So it goes up and down depending on the iron price and what's happening in China. So you can see here, right? But it does actually do well, because right now I'm up to about 2%. You're getting excellent dividends. So it's one of my favorite companies, I'll be honest with you. I want to get to 100 shares and forget about this company. I've been neglected in the last couple of weeks. My plan was always to buy 1 share of this company every single week. I haven't done that, but I'm going to restart it soon because I was short of cash in the last few weeks. Not just because I didn't have any cash, it's because I just prioritized other things. And I will mention some of those things, inshallah, in my next portfolio update. But there you have it. I don't have any more money left in this account. Perfect. Okay, we still got about 44%. Basically, we used about 44% of the ISA account, and I will be adding more money to it. Listen, the most important thing for me, guys, is that I stay transparent with everybody, that everything that I'm doing here. And genuinely, please, if you are out there, just don't think, oh, I have got a lot of money to do that. That's not the point. The point is, if you can buy quality companies every single week, okay, and focus on the basic long-term plan, honestly, you will get there, inshallah. I've been stuck on this £80,000, whatever it is, for a long time, okay? And the markets will change. So when they down, make most of that opportunity. By the way, if you haven't joined us on the Discord and the Patreon account, please do so, because you've got a lot of things in there that you can actually utilize. For example, things like the spreadsheets that I have, the ebook, and I've put that in there. And obviously, if you join us on this Discord, hopefully you will meet brothers and sisters who are like-minded, who want to invest for the long run, inshallah. That's me done. Have a wonderful day. Assalamu Alaikum.